begin the program? Okay.
You take it away, Dennis.
Okay, well, good morning and welcome to the Kushner Report for June of 2023. And at the conclusion of our discussions this morning, you'll have an opportunity to participate in our question and answer session. So we have a lot of interesting things to talk about this morning. So first of all, let's take a look at the agenda for today's program. We're going to talk about the key economic indicators, the global economy, the domestic economy, mergers and acquisitions, and other significant economic news. And then we'll take a look at what's ahead in 2023. And today we're going to take a look at the semiconductor outlook for the remainder of the year. So the semiconductor outlook is quite interesting. So first of all, the global semiconductor revenue was really projected to decline by 11.2% in 2023. And that's according to the latest forecast that was released by the Gartner Group. And in 2022, the market totaled about $600 billion, which showed some marginal growth of about 0.2 of a point over 2021. Experts believe that the company growth will be more bullish in 2023. Capital spending in 2023 will be impacted by rising global inflation and interest rates. And however, many company executives really believe that the capital spending will be higher than it was in 2022. R&D, research and development spending, is also projected to increase this year, well over the 2022 time period. The semiconductor industry, basically, you look at some trends that 2022 proved to be a very interesting year, turbulent times, where the industry, despite enormous investment and support from the private and the public sector, we saw the fact that there was an incredible amount of coverage from international media as the knock-on effect of chip shortages impacted the general public. And you can remember that, especially in the automobile industry, where cars were hardly getting any new vehicles to market because of lack of chips.
I can't come to the program.
And then, first of all, we take a look at if the industry is growing. So on the first projections made in early year, we really talked about the revenue projections, and really analysts and industry experts hedged their bets for the coming year. You know, worsening global economic conditions leading into the entire consumer electronics market showed a slowdown, resulting in an oversupply in some areas of chips, which is unavoidable. But billions of dollars were invested to increase manufacturing capacity all over the world, especially in the United States. And the demand for services, for example, for smartphones and laptops appeared to be declining at that time. But regardless of what happens to the global revenue in the industry over the next 12 months, we're likely to see a number of trends shape in the industry. Now, one of them, for example, is the automobile industry is expected to really soar. As electronic vehicle market continues to soar and research and development in autonomous vehicles thrives, we're really likely to see the area in the industry boom in 2023. You go back to parts of last year, remember there were cars waiting online like Ford, et cetera, had trucks, thousands of trucks that were just sitting there online, ready to be released to dealers once they got the final chips. So the automobile industry is even more tied to electronification today than in the past. And experts really believe that the auto sector is more important to driving the semiconductor industry in 2023. But having said that, there's other critical industries that are going to be moving forward this year as well. So we have wireless communications with the advent of the new phones coming out by Apple. We're seeing artificial intelligence, which every day now it's growing even faster and quicker. And we see consumer electronics, and then finally industrial equipment. So these are big demands for chips going forward. If you look at closing the gap in the sector, this is a real concern. So the investment in the semiconductor industry in 2022 is incredible. We lead with the current gap expanding at an incredible rate as dozens of new facilities will be needed to be staffed. Keep in mind, as I mentioned last year, there were at least 12 or 13 new semiconductor factories being built in the United States, in Nevada, Arizona, and back in the Ohio area. And they'll be coming online, many of them will be coming online either at the end of 2024 or sometime in 2025. So there's an estimated 1 million skilled worker demand that we'll have to have in place by 2030. So for some of the industries that you see changing and going away and going down, there's a tremendous opportunity in the semiconductor area to train and develop skilled workers. So that says we're really talking about hiring about 100,000 of these folks every year. And the result will be the companies will be looking for record numbers across the globe for full potential. Now, new plants began to be built in the United States, as I mentioned earlier. The pandemic impacted the world supply of semiconductor products. Keep in mind, a couple of years ago, if you remember that Taiwan at the time accounted for more than 54% of the semiconductor chips being manufactured. And most of the chips in this country were developed offshore. And that's radically changing now to change how that works. So what we're saying is you look at Intel, for example, they spent about $20 billion to build 2 new chip factories in Chandler, Arizona. Hopefully those are going to come on sometime in, like I said, late 24 or possibly 2025. And there'll be a demand for people. The housing markets there are a lot better than they would be in California and other places in the country. Then we have Taiwan is building a giant semiconductor plant for $12 billion, and that'll be built near Phoenix, Arizona. Samsung is spending $17 billion to build a chip factory to focus on 5G technology, et cetera, self-driving cars and artificial intelligence. And this will be headquartered somewhere in Texas, possibly somewhere either outside of Dallas or the Austin area. And then Intel committed to another $20 billion to build a mega site in Albany, which is located in Ohio. The purpose of this is to set up a new Silicon Valley type of concept on the East Coast, where there'll be more manufacturing and chip development taking place. But the building of all these new plants, again, as I said earlier, will take time to get online, and we'll see conditions continue to improve as we go forward. So this is a real good move on the part of the United States. So if you look at companies, for example, on the next slide, if you look at the companies, for example, concentration going on in 2023. So what's the real emphasis here? Well, bringing back manufacturing to the United States for expansion of existing facilities and building new fabs. Digitally transforming and digitizing processes and techniques, along with improving financial planning, operations, procurement, and the overall supply chain process. We want to balance the semiconductor workforce whereby there are skill sets where we have shortages and there's areas where too many people are lacking things to do. They need to really focus on that to utilize all people at all levels. And again, putting together more training and development programs for people coming into that space from other sectors. And then, of course, we want to talk about improving the environments, governance, and sustainability. And as I mentioned, it's aggressively hiring, training, retaining, and developing employees to take greater responsibility in the future. So that's going to be a booming industry as we go forward. Some final thoughts. There's some really things to think about here. First of all, should the United States and its chip makers attempt maximum self-sufficiency in the fabs? That remains to be seen. And should we continue to move away from Asia to be more locally affected by alternative sources for the semiconductor industry? Some concerns are about labor costs and general costs in general, about higher margins. But I think we need to do this to be more self-reliant and to control our own manufacturing and our own destiny going forward, rather than having to rely on foreign countries for different kinds of aspects of our businesses. So now let's take a look at the key economic indicators. We're going to take a look at the gross domestic product, inflation, unemployment at the federal level, the California level, and then the price per barrel of oil. So if you can see the little asterisks on the side here, essentially, these are the changes that took place since we had our last session. So global GDP is now projected to go out about 2.5% this year, and then staying about the same for next year, 2.5%. Our GDP is projected to go out this year 1.6%. And then if you look at 2024, going on at this point around 1/10 of a point. Now, this is predicated on the fact that we could be entering a recession sometime later in the year, and that could flow over to sometime next year, and we'll see what really happens. But again, there's too many moving parts. By the way, this morning, the government announced that the first quarter GDP was revised up from 1.3 to 2%. So that's a good indicator this morning, which will have a favorable impact on the markets, the stock markets. When we look at inflation, it's moving in the right direction. We're looking at going out the end of this year around 3.6%, and then dropping down somewhere around 2.1, which is that target range for inflation. The unemployment factor right now, we're looking at across the board around 3.7% nationally and 4.5% next year, again, tied to potential recession. If you look at the state of California, we're looking at 4.5% unemployment this year and going up to 5.1 next year. Now, in the area of prices, we're leaving the range still about the same. It really looks like about $80 to $100 a barrel for that West Texas Intermediate. And you'll see some changes. Right now, I've got good news we'll talk about later, but that's kind of where the range looks like it's going. Now, taking a look at the global economy, again, China moving out of the pandemic situation is maturing more and getting back to business as usual. Even though they're not going to be around 10% growth, they're projecting somewhere around 5.7% growth this year for the Chinese economy. So it's coming back on board now, moving in the right direction. When we take a look at Asia, again, the retail sales moved up substantially and industrial product development moved up markedly in China since April. And Japan had great news. Their income and GDP rose by 1.6% in the first quarter of this year. And consumer spending is beginning to pick up along with capital investments in both sectors. So this is very good for the Japanese economy. When you look at the international place, global inflation pressures remain persistent, a trend which is likely to see key central banks maintain, if you will, high restricted monetary policy for some time to come. So they're not out of the woods in that area at all. Now, Canada started off by 3.1% annualized rate of growth in the first quarter this year, which is very good for them moving forward. However, they're still plagued with heavy inflation. I went out about 6.1% last month, and the target there is to get it down to around 3%, hopefully by the end of the year, early next year. The other thing is the core area, which is, the such things as food, fuel, et cetera, did decelerate to 5.3%, which is really key. So that's a real key barometer for them. And of course, the Bank of Canada raised their interest rates last month, which we didn't, by 25 basis points. So their inflation rate, their interest rate today is running at 4.75%. Now we look at the Bank of England, they delivered a large rate increase. So their inflation is still causing a lot of problems. They raised their interest rates by 50 basis points. So now they're running around 5% for the year. And expectations are they will continue to deliver rate increases until they can get inflation under hand. Now, looking at the United States domestically, the real key here was at the end of our last presentation, the day or two after, Congress and the president prevented what would have been the first time a default occurred in the United States by agreeing to suspend the debt ceiling through the end of 2024. So that gives us some breathing room. And the U.S. economy basically is hanging on we're seeing some tough slowing that's taking place right now. So retail sales really rose unexpectedly, while factory output really cooled. And other data showed that claims for unemployment began to rise, and they're now rising at the highest rate since 2021. And basically, we're talking about some sluggishness, and we'll talk about that when I talk about the manufacturing sector later in the presentation. Now, taking a look at inflation, annual CPI decelerated in May to 4%, which is the slowest since March of 2021. But core inflation, which is food, fuel, and rentals, et cetera, like that, is still pretty high. And that's going to have to come down further. And as Powell said this morning or last night, that there's no problem, for example, in considering raising interest rates again, possibly as much as 50 basis points by the end of the year, between now and the end of the year. So we'll have to wait and see what happens with inflation. Now we look at the trade exports. They went out at $249 billion in April, which is about $9 billion less than in March. The trade deficit, which is a concern, rose to $96.8 billion in April, which is up from the $85 billion we saw in that time frame. The concern is here we're getting close to $100 billion, and that's a negative for us. So we've got to change that field to reducing that number going forward. In the area of the retail sales rose about 0.3 points in May, and that was powered by big gains in the building material stores and automobile dealerships. So you're seeing a lot more cars being purchased around the country. Now let's take a look at the the U.S. employment package for the year. So first of all, in May, we saw the creation of 333,000 new jobs in May, and the unemployment rate, as I said earlier, increased to 3.7%. But the key areas are here is business and financial services has been strong for the last 24 months. We saw good hiring in 25,000 more jobs in construction, health and education, and leisure and hospitality were very strong. Information services, which is in the high-tech sector, we saw a negative here. And then we saw a real negative, which is the downturn of a negative job loss in the manufacturing industry, which is really key to the economy. Now, one thing I want to mention before we move on to that. So if you go back to 2022 and you look at the employment package, there was hiring about 390,000 jobs. So between the 2 years, from May to May, we saw a decline of about 13% in hiring. So the hiring process is slowing down, but it's still relatively strong. Now, taking a look at the California economy, we saw an increase of about 47,000 plus jobs, and the unemployment remained about 4.5% in May. Construction had a good month in adding 6,500 jobs, health and education, again, information services, but the real downer in California was the loss of about 5,700 jobs. Now, taking a look, for example, when we look at the interest rates, for example, we talked about inflation, and it's relatively under control. But the interest rates, again, the Federal Reserve decided to place a hold right now on raising interest rates last month. And as I said earlier, they are considering there could be an increase of about 50 basis points broken up over the last remaining months of the year, depending on what happens with inflation. So it's moving in the right direction, but they're still holding that trump card to decide what they're going to do. I mentioned manufacturing. The concern here is, well, actually, before I move into that, the mortgage rate, average mortgage rate around the country, up closing a few days ago, the average is running at 6.99%. It's still pretty high. And we'll see where that goes if they add interest rates increase again between now and the end of the year. Manufacturing index, as I said earlier, it dropped down to 46.9. The key barometer for this is at 50. So we're really borrowing on the time of really looking like we're already in a recession. Many people say we're not, but it's slowing down. So we've got to get that number over the 50 basis point line. Now, in factory orders, orders increased by 0.4 of a point last month, which is good over the month of April. So that's moving in the right position. Small business confidence level is at 89.4. Again, you go back several months ago, it was over 100. So we've got to get that number back up, still under the barometer. Now you look at consumer confidence. In this case, consumer confidence fell again, but it's still over 100. It's running around 102, which is still pretty strong. When you look at the crude oil price I mentioned earlier, two things. Number one, the price of oil per barrel went up about $1 a barrel. It's at $72.57 as of a couple of days ago. That's up about $1 over May. So the good news is it's still staying low. And I'll mention something later about OPEC. The housing market, here's a good sign. The housing market unexpectedly saw a jump of 21.7% increase over the prior month, which is great. And then we had new home sales. But before I talk about that, I want you to think about this. In 2022, the study was released that single home family homes in the country, on average, so the U.S. average price across the country for a home was $390,300. Now we look at Texas, the average there is $340,000 per unit, and Florida is at $403,000. California, you better hold on, was at $823,843. Almost 4 times, almost double what it's taking place all over the country. So that puts things in perspective in terms of the value of housing in the state of California. Now, home sales in June rose by 20% from April in California. And this is great. This is a big improvement. Again, there's very little volume there, but the increase in movement is starting to increase, which is good sign. So in Los Angeles, those houses were on the market. The average was at 745,000, and that increased by about 0.8 of a point on pricing. Sales jumped 25% in May over April. However, they were down about 21% from May of last year, and that's based upon volume. And then if we look in Orange County, very strong again. The average there is running at $1,256,000. The selling price was up about 2.6%, and sales were up just under 24%. And in San Diego, the median price of those available was at $935,000, and sales were up by 4.5%. The price, if you will, was up 4.5%, and sales were up by almost 21%. So a good market in May for the real estate market. Now, existing home sales, U.S. home sales fell again in April for the second month in a row. They dropped by 3.4%, and sales over a year ago for the same time frame were down 23%. So that area is still struggling. When we look at construction spending, the good news is it was up about 0.7 of a point. So there's still being moving money in that area. Now, as you know, the productivity report for the second quarter won't be available probably until sometime in either late August or early September. They're now only looking at this on a quarterly basis. Now, one of the areas we've talked about over the last several months, we've got some good news here on company displacements. You go back and think about the last 3 months, we have had lots of companies laying off beyond 1,000 employees. And even companies laying off 200 and 350 here and there, that continues. However, this month, Disney had a layoff of 2,500. We saw Grant Thornton, which is a second-tier accounting firm, 300, and then J.P. Morgan, 1,000. So that's good news in terms of large corporate layoffs. So that's a positive. And now we'll take a look at mergers and acquisitions. So Duke is basically selling its renewable energy unit to Brookfield for $2.8 billion. And this is the portfolio involved in the wind and solar farms business area. So this is an interesting deal. Amazon is active again. They're buying Roomba iRobot for $1.7 billion, and they're moving more into the robot business. And with some of the expectations and some of the centers that they have, you're going to see fewer live employees there and more robotics taking place in the whole supply chain with them. And this is the movement they want to do going forward. So that'll have a major impact on the labor in that area. Then we look at Intel, again, as I mentioned earlier. So Intel is investing $25 billion into Israel to build a major factory in Israel. This is the largest investment that Intel has ever made outside the United States. So this is a big deal, and that's supposed to be kicking off sometime later this year. Eli Lilly, again, is very active. They bought a company called Dice for $2.4 billion, expanding their immunology pipeline. They continue to expand their business base, if you will. So those are the deals that were taking place now. You know, it's a slow time of the year, but there's still a lot of activity. Now let's take a look at other significant business. So I mentioned the price of oil earlier. So Saudi Arabia would like to raise oil prices. So they've decided that on July the 1st, they will cut production by 1 billion barrels a day. Their target is to move the price of oil up somewhere between $90 and $100 a barrel. So that's the plan right now. So we'll see. And we may see that affecting the pump prices in the United States over the next couple of months. Now, Meta, which is the parent company of Facebook, just got nailed at the barn door. And basically what happened, they had a violation of privacy. So if you look at the privacy, especially in the European common market, they were fined $1.3 billion for violating privacy rules. And what this was is they were ordered to stop transferring data from Europe to the United States. And the penalty comes out of the Ireland's Data Protection Commission. They failed in 2020 and 2021 to stop moving product and all kinds of personal data to the United States. The real concern is that the data is not protected from a lot of American spy agencies, and therefore they've been fined a lot, and there may be some more fines forthcoming. Microsoft, as you know, is invested in a small group of people that had left Google, and they're investing more into the AI space with their ChatGPT GM. So what you'll see happening here is that they'll continue to input more into the area. What they want to do is move this into their Bing technology engine like Google, and we'll see how that works. And the real key is to really ratchet up. This is going to be a real competitive situation between Google and Microsoft going forward. Now, Hyundai and LG Partners is building a $4.3 billion electric vehicle battery plant in Georgia, and that will begin sometime in 2025. Then Hudson-based Diebold filed for bankruptcy. And Diebold, what they do, they automate, digitize, and transform the way we do banking and shopping. So you think about this, it's through the creation of transaction systems such as ATMs and security equipment. So they're filing for bankruptcy. They're got a serious cash flow problem. Now, for those of you who are familiar with the venture capital marketplace, Sequoia Capital Ventures is one of the largest, oldest VC firms in the country located in Northern California. Well, because of a lot of activity that's taking place right now, they've decided to break the firm up into 3 specific geographical areas. And what they've done, for example, you're familiar with, they've backed Google, Instagram, and a lot of China's largest companies that have gone public in both markets. And the idea now is, because of the concern they have, the scrutiny taking place between Beijing and Washington, D.C., and it's escalating, the company is basically breaking into 3 regions. One region will be China, one will be the European Common Market, and the other will be the United States. Now, General Motors will be investing more than $500 million in another new plant in Texas for the production of more profitable generation of SUVs. So there's another investment by GM moving in that area. GM is also going to make another investment of $1 billion to produce new heavy-duty pickups. So despite the commitment to the offer of all-electric vehicles by 2035, the company will continue to invest in traditional vehicles such as the Chevrolet Silverado, the GMC Sierra heavy-duty pickups. That'll continue on. They plan, like I said, the $1 billion investment will take place in 2 plants located in Michigan. Now, San Francisco, going on to the next slide here, San Francisco, a couple of years ago, the value of homes and so forth in housing in San Francisco was well over $2 trillion. And since the beginning of the year, homeowners have lost about $260 billion in value. And the concern there is the fact that over the last several months, it could be 12 or 15 months, the date wasn't given, you can believe that 65,000 residents, or 7.5% of the population, have left the city of San Francisco. And that's continuing. So that there's a real problem there. Now, as I mentioned earlier, for those of you who stayed in San Francisco, if you've been around the area there in the main part of the city, 2 of the largest hotels in San Francisco, owned by the Hilton Group, are closing. So you're losing basically the Park Hotels and Resort is closing, and so is the what they call the Park 55. 2 of the largest hotels are closing, again because there's too many vacancies in the hotels, and because of a lot of the businesses leaving the area. So San Francisco is really going into a real problem, and it's going to continue for the time being, which is unfortunate. Now, AT&T has made a corporate decision, and they're mandating and forcing 9,000 employees to relocate or basically resign. So AT&T ordered 60,000 managers to report to one of 9 offices nationwide, drastically consolidating its footprint and leaving 9,000 workers to make a choice to either relocate or resign. And this is the problem. So what they're going to do, they have over 350 offices over the 50 states. Now, FedEx, as you can see what's taking place in the transportation industry, they're going to remove another 29 aircraft from its fleet this year because of the permanent retirement and temporary storage problems. And plus the fulfillment rates have gone down substantially. So we're seeing that happening all across the world for them. And they're going to mothball 29 more aircraft. Now, U.S. offices, this is something here that was a surprise, are rebounding. The unlikely rebound won't take place until 2040. Right now, property values in the commercial marketplace from the pre-pandemic levels are down 35%. And major investors are already beginning to default on buildings across the country. U.S. buildings are unlikely, as I said earlier, unlikely to come back until 2040. That's based upon the industry outlook. So there's a real concern with that in terms of consolidation. I believe one of our folks that does economic development work in San Diego indicated a couple of months ago that the vacancy rate of office buildings in downtown San Diego is somewhere between 13 and 15%. That's pretty significant. Now, PricewaterhouseCoopers, which is interesting, they're going to put $1 billion into what they call generative AI. So they plan to invest $1 billion in artificial intelligence technology in the United States operations over the next 3 years. They'll be working with Microsoft corporate on this particular area for OpenAI to automate aspects of tax, audit, and consulting services. So the multi-year investment will be funding to, keep this in mind, to recruit more AI workers and train existing staff in AI capabilities while targeting other software companies for acquisition. And Pricewaterhouse is also advising other companies on how to best use the AI process. Keep in mind, from Sarbanes-Oxley, which occurred a long time ago for a number of you CFOs on the call today, we used to do a lot of work up at Microsoft, but then the decision was made that Deloitte would keep the audit. We can no longer do consulting. So obviously, Price Waterhouse is now the major consulting for Microsoft. So this is a pretty strong deal that's going on right now. And then finally, we have the end of, unfortunately, of Bed Bath & Beyond, and Overstock bid and is accepted. Will purchase and pay for about $21.5 million of the remaining stock, and they'll also absorb the liabilities remaining in the existing contracts. So that kind of gives you a little bit of an overview of what we're seeing in the marketplace right now taking place. And there's, like I said, there's a lot going on. We're in the summertime where a lot of people are on vacation. A lot of people are, a lot of businesses are looking to see what's going to happen. I think from an inflation standpoint, I think we're moving in the right direction, even though I don't like the way they calculate it. But I think that the price of energy, food, and everything else continues to escalate. And as I said, 2 months ago, the price of food for key items that they looked at were up almost 15%, which is significant. So with that in mind, I'd like to open it up for Q&A.